Hey, everybody. The Mavericks are back together, and looks like my camera just decided to cut out on me. How nice.
Too hot, man. You're too hot. It says you're too
listen,
hot.
what can you do? When the markets are doing what they're doing, we just got to do the best we can. All right. On that note, oh, man, this is the way to start. And now, watch, it'll cut out in a second. But hello, everyone. Welcome, Scott. Welcome, Mike. We are here to discuss the markets, so let's get right to it. Where do we start? We got the inauguration on Monday, right? We got the Fed next week as well. We just got through the CPI and the PPI data, and retail sales today were a little bit lighter, but PPI and CPI seem to be a little bit better. I guess, Mike, want to walk us through the CPI data and why the markets ripped higher in yesterday's action?
Yeah, I was afraid you were going to go there. I looked at it as, okay, it wasn't as bad as everybody expected. It was the second one in a row. PPI was less than expected. It alleviated most of the fears of inflation getting out of hand. And then we had this massive rally. I think it just eliminated all the shorts. To me, the market's just about mostly kind of more spec trading right now. But I can show you a few charts that I wanted to talk about. And this is one thing we mentioned right before we came on. I guess it's not working. And
no, I got your screen here. I'm just trying to mess around with my camera. I apologize, guys.
Let's go. Well, it's about yields. And first thing I need to do is admit, yes, I've been wrong. And what I think is still going to be one of the next big trades. And that's just the U.S. Treasury long bond catching up to most of the rest of the world, which is almost 200 basis points below the U.S. I mean, the top 5 countries, just start to look at China, it's 300 basis points below the rest of the world. And that might start with crude oil. So what I show you in this chart is crude oil bumped up against 80. I mean, that's Brent's still there. WTI looks like it might have peaked at 80. That's kind of inflationary, but it jumped up on very suspicious things that I saw last year in copper when it peaked, and I saw when crude oil bottomed. That is pretty significant managed money net position. So I won't dig into a little bit, but I'll dig into what I think might be happening in the next big trade. In this chart, I just show you crude oil bumping up to 80, and then the 100 week and 200 week, and sorry, the 50 and 100 week moving average, all pointing downward right at 80. So I look at this. This is a trade, and I look at it as an next trade. I'm like, all right, I'm probably be testing shorts. Maybe it stops me out, but what's your downside? Maybe $5. What's your upside? 10 to 20 is the way I look at normalization. The key thing is I'm just overlaying this with the NASDAQ, because the NASDAQ's got to go up, I think, for crude oil to go up. And I'll afford it to one thing, then we can tilt over to wherever you want. This is the same thing on crude oil, because all commodities bounced. That's the key thing that happens this time of year. Everybody enters new positions, and they're clearly getting long commodities. I think it's seriously risky that they're going to go down. So here's one thing: this is a 30-year bond yield, just bumped them up near 5%. At the same time, Brent bumped above 80. All right, how sustainable is that? I think maybe that long bond peaked at 5%. At the same time, I'll end with this. What happened is this is managed money net positions. It jumps up to about 10% of open interest. It got short here when crude oil bottomed. So the longs are back on board. The specs are on board. They're at good resistance. The market's bumped up, and good luck with that one. I look at it as a trader, like, yeah, maybe I'll be testing the short. Now, I don't trade anymore, but this is kind of things that I look at it as a strategist. So I've been kind of looking at that.
So Scott, turning our attention more towards the crypto markets, I'm sure everyone's excited about an update here. We've seen Bitcoin have a beautiful move. We're back above 100,000 on Bitcoin. Is this like a Trump preemptive kind of pump because people are hoping he's going to announce something next week or do some things?
I think we've already priced in the Trumpiness. To be quite honest, I think we've been Bitcoin traded up to 108,000 on Trump's election and all of the appointments that we've seen and all of the hype around what's likely coming. So I don't think right now this is necessarily Trump specific. I mean, fundamentally, we're still ranging here, right? I mean, we put in that high around 108. I think we kind of dropped down into, just below 90. But I will say, I mean, Mike was on Macro Monday with me when we were watching it go below 90. And I was distracted because I bought Bitcoin and Solana when it happened. I felt like there was a fever pitch of bearishness. It was just not on the show, just, around. Like nothing fundamentally was happening. I think it was an overreaction to sort of what was happening with rates and one of those like highly correlated times when it was doing what risk assets and stocks were doing. And I mean, you could see that candle was absurd, right? You had that basically from 96 to 89.5 spread. It closed at the exact same price it opened at. That was a great reversal signal. I mean, if that doesn't tell you it's time to buy, at least as a trader. And now, breaking the 50 MA and what I kind of consider resistance just below 100 and retesting that 50 support today and bouncing. I mean, this just looks like there's a whole lot of buying pressure.
So when we saw Bitcoin dump out, obviously before that with the rest of the market, it seemed to be coordinated with the NASDAQ selling off, right? And then here we have the NASDAQ ripping higher and Bitcoin's ripped higher. I mean, is that continuing to be a concern to you, or you think regardless of what the markets do, will trend higher? Because I guess that's the big question, right? Is if the NASDAQ, goes to new all-time highs, I think we all would agree on this panel, Bitcoin probably sees new all-time highs. But what if we see that even a 5% correction? Is that enough to crush Bitcoin by 15, 20%?
I don't think so. But right now, man, it just feels like markets want an excuse to go up for now, right? I think there was like all the yield fears and inflation fears, which it's irrational. Obviously, the yields were up at 4.8% while the Fed is cutting. We've talked about that a million times. DXY hit 110. I mean, the dollar showing tremendous strength, should be crushing everything. But in my mind, PPI and CPI data weren't even that good, right? It's like they met expectations and the market pumps because I think people are just looking for any excuse right now. It's irrational exuberance. So does that mean a correction comes eventually? Yes. But once again, for me, it's like timing that is impossible. Might as well ride the wave while it's happening. I mean, the buying here on all of these assets on mid-range data that people want to call good just means right now people they want to be long. And Mike said it. I mean, it's what he's seeing. I don't know when that ends, but I think Bitcoin, if we get the news from Trump, now I think so. Like I should say, we were priced in for all the things Trump was going to do. Now we have to see him do them. Right. Because I do view Bitcoin in the hundreds as priced to perfection for Trump to meet expectations. So I do think there's a potential for a letdown if all of a sudden Bitcoin's not even mentioned for the first 100 days, for example. I don't think that'll happen, but we got to see some follow through.
Yeah, absolutely. And I think, I'm just looking at the 10-year yield chart here and just kind of taking note here is that, really, when did Bitcoin start its move? Right here when the 10-year yield was right at this high, and it's continued as yields have come in, which in all fairness is what the stock market has done as well. So I'm just looking at the correlation or inverse relationship here. And then we flip over to, for instance, the NASDAQ composite chart here. And you can see, again, there's your low exactly when yields topped out. But one thing I will throw out to the markets, and this goes to what you were saying about the kind of animal spirits, like just wanting to go higher, is that we've seen yields going up nonstop for, basically since the Fed started cutting rates in September. And the markets are not that far off their all-time highs. And even with Bitcoin, when it was down to 90,000, it wasn't like it was down 25%. And very quickly now,
such a shallow correction.
Yeah,
I mean, when we were at, we were below 90, and 48 hours later we're at 100.
Yeah,
and I think 48 hours before that we were at 102. So they're welcome to the volatility. But listen, it is definitely fair to say that in this case and in many cases, when there's a macro driver of fear like those yields, Bitcoin's going to correlate to everything else.
Yeah,
right.
That makes a lot of sense.
And we see it. And honestly, it's because I happen to be, I know you guys watch the markets all the time, because I happen to always be live on YouTube at 9 a.m., and so I'm always there when the market's open. Bitcoin sees a lot of volatility at 9:30. Between 9:30 and 9:45 seemingly every day now. So listen, I mean, when the market's open, we got a lot of institutional involvement. They're playing in our pond now for sure.
Yeah, no, I agree with you. So just flipping back to gold here. So we talked a little bit about Bitcoin. I want to go to altcoins a little bit later, talk about the price action there. And I actually want to ask you about XRP, Scott, in a little bit as well. But before we do that, flipping back to another or an asset that's more of a safe haven asset. This is something, Mike, so we've seen gold generally trending near its all-time highs when the dollar was ripping higher. Now the dollar's pulling back and gold's going up too. So it's almost like, is there a way for gold to lose here? And I'm saying that with obviously knowing that there obviously is a way, but it seems like when the dollar was going up and people were getting fearful, gold was going up as a safe haven. And then when the dollar comes down, gold being priced in gold, it could, or in dollars, it could potentially go up. Could you kind of give us some ideas about what you're seeing here?
part of the reason I enjoy about being with Mavericks. That's an absolute way to ask the question about gold. What's the problem? What's the risk? Because everything I see about gold is bullish. Almost every scenario. I think the number one risk for gold is what's been pressuring it. We've had 4 years of gold ETF outflows. It's all gone to Bitcoin. I think it's flips to inflows this year. And part of the reason is because the stock market's on a tear and yields are high. So stock market going down means gold goes up. I'll tilt over to this point in a second. To me, the number one risk for gold is if we have President Xi hang up the phone on President Putin, pick up the phone with Donald and say, sorry about that unlimited friendship with that bad guy over there. I want to be your friend. Alleviate global geopolitical tensions. The number one buyer of gold on the planet is China. I think that's going to flip this year, particularly when we see a backup in the stock market. And then didn't say it, partly because our chief strategist, Gina Martin Adams, is now bearish stocks. That's an oxymoron for the last 4 or 5 years. She's been spot on. The key thing, as we know, a lot of people watch this program, is I'm really addicted to that Bitcoin to gold ratio. I mean, it's stuck around 37, 35. It got to high of 40. And it's just stuck, and it's not doing what it should be doing with the stock market blasting off the record highs. And if the stock market has its 10, let's put it this way, I do predict we're going to have a 10% correction S&P 500 this year. God help us. What if we have 20%? We used to have those all the time. What I'm showing you here is I've been working with the Bloomberg economics team lately. Yeah, and they have created this model for Bitcoin. I really dug into it. And without trying, part of the model, this is a model that shows it's called the Bitcoin specific driver. It almost completely matches the gold on the Bitcoin to gold ratio. Yet it's not. It's a derivative of their model until recently. So what I'm saying, this model says that Bitcoin gold ratio is very high unless when did it shift out? When did Bitcoin gold ratio break above the model? Was right when ETFs were launched, a fundamental shift and a fundamental paradigm shift in the market. And then when Trump was elected right here. The key things right now is I think the market's priced for that Bitcoin strategic reserve. And we saw today it might not include Bitcoin. It might include some other things. So that's the thing.
It would include Bitcoin. It would just include other things as well.
Other things as well, which is somewhat dicey. But I want to just tilt over to two things about this. What I'm building up to, me, I think, is what the next big trade is. And it starts right here. This is the Bloomberg Commodity Spot Index. I show you with a 100-week moving average. It's the narrowest since 1997. So it's breaking out. What's the one lesson you learn in commodities? Is it breaking out to the upside? It looks like it is. But the lesson you learn is typically the first move's a head fake. And often when it's against fundamentals, like I just show you plunging yields in China and China decline, it's kind of hard for commodities to keep going up. The key thing is if they do go up, the stock market's up, what does that mean? The Fed's got to shift to tightening almost. At the same time, we're talking about gold. Look at that gold to S&P 500 ratio. It's at the nearest 200-week Bollinger Band since in 30 years. Markets are so ready to move, and the risks is it just goes up a little bit. I mean, just a little bit. So to me, that's the next big trade I wanted to point out now, and I'll end with this one here. This is gold divided by, I can only go back about 34 years or so on this one. This is gold divided by the Bloomberg U.S. Treasury 20-year index, the long bond. It's the most stretched in 30 years. I mean, it's just taken off. It's a rocket ship. And to me, that's the trade, is what takes a little trigger for bonds to just kind of catch up to gold a little bit. I don't think gold goes down so much, but bonds just catch up. And there's one little trigger, and that is I think the U.S. stock market just dropping 10%. Oh, gosh, that used to be normal.
It's happening all the time.
That did used to be normal. So when you say bonds, and just so people watching this, when bonds go up, yields go down, right? There's that
exactly. Yeah. So this is what happened this week. We had this long bond, and actually it's happened this year. It got to 5%. Remember, that was the peak here last year. It's actually, you have to go back to 2006 or so. Last time we were at certain levels before the Fed started easing. So we're back at that 5% magic level in the long bond. For comparison, I mean, China, it's about 2%. In Japan, it's even less. So maybe it's peaked with crude oil. That's why I think crude oil is such an integral part of it in long bonds. And it's also positions. As we know, this time of year, everybody enters new positions. And they're all getting long commodities, get long crude, get long corn, get long Bitcoin. And stock market, I don't know.
So just turning our attention, right, to the markets in terms of yields coming down, do you think the market will fall, like the stock market I'm talking about? So for yields to come down, the stock market, let's say, corrects 10%. What's the trigger for that? Is it a geopolitical issue? Is it an economic issue?
How about we start with tariffs? What do tariffs do. Number one thing they do is they hurt corporate profits. Why has the U.S. corporations focused so much on offshoring and pushing their supply and their production offshore? Because they can create more profits. It's cheaper. Who has to pay those tariffs? U.S. corporations, the importers. So just a little bit of correction in the stock market. Typically what it takes is just the stock market to go down. And here's the problem I like to point out. It's about $13 trillion, at least to the peak. That's how much wealth the U.S. stock market added to GDP, added in terms of total wealth last year. That's about 40% of GDP. That 13 trillion was the most ever. Part of the reason the Fed has to stop easing, and this is something we talked about in the program a lot, is it's just silly to expect that much wealth creation and inflation to go down. And the Fed has finally realized that they cut too early, they cut too much, bond yields are going up, the market's on a tear and saying, no, inflation's not going down. How can you expect inflation to go down when you create that much wealth? Bitcoin and cryptos are part of it. That's, to me, I think, is the reversion. I think we've reached, at some point, we got to the inflection point where, all right, well, I can't ease anymore because I'm creating too much inflation. Even if unemployment's increasing, I really can't ease because inflation's sticky. We're at that level. What's the next big trade? And that's why I wanted to show you this one key chart right here. Is this looks like the stock market's breaking out. No, sorry, not stock market. The commodity market, which is more associated with with inflation, is breaking out up. At the same time, this is Fed easing expected in 1 year. Remember, this is kind of that bottom last year. We're expecting a lot of easing, like 200 basis points in 1 year. Now they're narrowing near to almost 40 basis points, getting close to zero. It means the Fed can't really ease in this environment. It means that fuel is gone. I think until market tells them that they can ease. And right now, with Bitcoin on a tear, commodities taking off, stock market going up, that's an environment where you expect the Fed to actually tighten.
Interesting.
Almost like they shouldn't have cut in the first place. Almost.
Yeah. I think we all discussed this too, right? We were like, I can't believe they're actually cutting here when the jobs data was so good and really inflation. This is something else we brought up, but like supposedly their goal was 2%, but they started cutting way before. They kind of started cutting it in the low 3% inflation level, which obviously when the stock market getting pushed to new all-time highs, you have the wealth effect coming in, which then makes inflation a little bit worse, as we've seen until a few little breadcrumbs from the CPI, PPI lately.
I mean, my assumption is that they were like overreactive to the fact that they received so much criticism for being too late every time in the past.
Probably.
They just didn't want they didn't want the inverse of, inflation is transitory and, letting it go and cutting too late. So, I think.
So what's unique about that is that the Bitcoin peaked on December 17th at 108,000, and the Fed eased on December 18th and said we're done. Okay, so it was a hawkish cut, which was kind of silly, but that's where I kind of point this out, and that's where the model is showing. This model is showing that Bitcoin to gold ratio is too high. Gosh, you hope it can stay at such levels, but just a little reversion is a pretty substantial statement, and that's the key thing I keep looking at is, we keep, when such a great year in the stock market and such massive competition for gold, and yet that stupid rock is still beating the stock market. That's a problem, I think, for a stock market. And that's where I'm really worried about some point where we might get a little more interest in the rock versus the new digital version.
So just flipping back to crypto, and this is one of the ones. So I was looking at Solana. All right, Solana's had a nice rally. By the way, great call on Monday to buy it and buying it. That's awesome. I saw Scott mentioning, or excuse me, I saw Mike mentioning that earlier too. But what's going on with XRP? Like, why the pump here? This is one of the few coins that is making new highs. What's the trigger here? What's going on?
Yeah, it's going to be the next global reserve currency. They're actually doing away with the euro and replacing it with XRP. I don't know. Listen, so I think pent up demand, huge community. I think there's a few things that are happening. So obviously Ripple led the way in sort of the altcoin explosion by getting some clarity from the SEC when they were being sued, right? So you had Ripple basically deemed not a security by a judge. That sort of was the original catalyst. And then continuing to get more regulatory clarity, getting closer to Trump, and a lot of people conjecturing that XRP will kind of be the banker's coin, or that their stable coin launching will be it. But at the end of the day, listen, I think it started because of the SEC. And then after that, I think a lot of people, like my friends who are, in their 40s and hadn't looked at crypto in a few years and heard it was pumping again, opened their Coinbase accounts and saw the top 4 or 5 coins by market cap and said, I remember XRP pumping like crazy last cycle. I'm going to buy that. I literally had 3 or 4 friends who know nothing text me those exact things. Hey, crypto's up. What are we buying? ADA, XRP, right? And so you had the dinosaur pump, and with a community that size, the continued follow through and an actual argument for some level of adoption. And they were sort of the big winners in the regulatory battle. And I think it's just continued through. I mean, it's a sight to behold.
It is.
It's fun. I love it for these people, man, because I've never seen people that were more like beaten down for longer, having to cope and, convince everybody they were right. It's nice to see them get this win.
Do you expect Trump? So Trump, the inauguration, I think, is Monday. Are you expecting any major announcements in the first week, like kind of because he kind of feels like he owes the crypto market? So because what I'm alluding to is that I'm sure that you're not the only one expecting that, right?
You think he owes the crypto market? You think that maybe there were promises made to his biggest donors that helped him win the election? Not in politics. But yes, I think we're going to get some executive orders very, very quickly that have already probably been drafted. I think we'll get a repeal of SAB 121, which is the SEC memo that basically says that banks can't custody crypto assets without holding them as liabilities. Meaning, so like if you wanted to custody a $10 billion ETF, you have to come up with $10 billion in cash for the other side of the balance sheet. Nobody can do that, right? So that I think will go. Strategic reserve, we could see an executive order, although my feeling is that he would leave that into the court of the Senate with Lummis cheerleading so hard for something like that. I just think we'll get, I think we'll get thrown a few bones, and then we'll see how much follow through and conviction they have after that. But and I do think that the SEC is likely to drop all of these cases, and that's even already being reported, which is like indescribably bullish if all of a sudden Coinbase and Kraken and all of those are not under investigation.
Do you think just one more question on crypto here? Are you looking at Ethereum as a potential buying opportunity down here? Like it needless to say, it's kind of underperformed a lot of the other coins. What's that?
You think?
Yeah.
Yes.
But I guess like what's your view on this? I mean, is it like the old school crypto now, or is it like are there other things that are better, or is this going to reemerge at some point?
That argument would only hold water if XRP, Hedera, Algorand, and all of these other dinosaurs hadn't already had huge pumps, right? There's nothing they have on Ethereum as far as being too old or too boring, right? I think Ethereum is just caught in the middle of a FUD storm, and it's something. I mean, I can't see a world where Ethereum doesn't have its moments, and I think it's going to just be a huge one. And by the way, this has happened every cycle. Bitcoin moves, Ethereum's dead. Like every time I've been here, I've heard it every single time, and then Ethereum flies and catches up in a matter of weeks. Maybe it won't happen this time, but like Larry Fink's still tokenizing assets on Ethereum last I checked. That seems pretty bullish.
Yeah, absolutely. So Mike, talking about the inauguration on Monday, tariffs probably within the first week, if not the first day, I would think. Are you thinking that the stock market has already priced this in? Like, are we already expecting a certain level of tariff? Walk us through kind of the game plan for next week, for instance, with the inauguration.
So I think the answer is genuinely no. And then most people who have watched this program for a while knows I've been kind of wrong on stocks. And I want to show you one thing that's happening really quick. And you showed that chart, but I can show you real quick. This is something how the world's changed. This is something I showed 2 years ago and last year, and that's just retail sales minus CPI. It's ain't good, CPI. I mean, compared to inflation, retail sales are basically similar as they were right before the great financial crisis and right before the recession of 2001. Yet at the same time, the Fed started to ease and commodities are going up. You know what that means? The Fed's hands are tied. They're screwed. They're stuck. I mean, Trump's coming into office at a really rough time to make things better. Stock market's really elevated, and it's just the rules of economics. First of all, the thing that I'm very certain about is from reading the book, No Trade is Free by Robert Lighthizer. He's going to hit hard with tariffs right away. I don't know how hard, but he will. And also reading from the book At War of Ourselves by General McMaster is he's going to have nothing but loyalists. And he does. He's doing that. It's going to be hit hard. the Trump agenda on steroids. And remember, this is a person who's is getting older. He's had a few assassination attempts. This is his last chance for legacy. He's gonna hit it as hard as possible, which means I think that he's smart enough to know, clever enough to know that you got to get over that stock market correction first. So you can say 2-3 years from now that, hey, we're over it, we're done. And so initially, if you say tariffs, that means corporate profits. Yes, short term it might mean inflation, but we all know that's temporary. But right away, it's corporate profits. And the bottom line for me in terms of the stock market is my colleague, again, one who's been spot on, Gina Martin Adams, has a whole team on Bloomberg, is bearish. And when she points out things, the markets, the U.S. market, stock market is just too elevated, I respect that. And I just look for ways around it and look for the next big trade. So simplistically, I mean, you can say it's too expensive after it's been down, but we're so elevated, just looking for that first 10% correction and want to see how Bitcoin and other markets react. That's a trading opportunity. But the key thing I showed you earlier, and that's things like this gold S&P 500 cross. It's so, I mean, it's 30 years of narrowness there. It's so ready to move. We're going to get volatile. It's going to be a great trading environment. It's probably not going to be good for the buy and hold types, but for the more tactically orientated, it should do well. And that's where I keep tilting over. Yeah, maybe someday McGlone's going to be right about that next big trade being in U.S. long bonds. Maybe I'll get stopped out. This might be the final year to throw me on the mat and leave me there.
I'm sure they're not going to throw you on the mat, buddy. Your analysis is priceless. Seriously, man. I love it. All right. So listen, we have a lot of things coming up. We saw retail sales today. I kind of want to just touch base on that. It came in less than forecast. I think it was supposed to be 0.6% increase. It came in at 0.4. Is that any sort of sign that the consumer is starting to get tapped out, do you guys think? Or is it just an anomaly and we'll see great numbers the next number?
I'll give one comment and then let Scott respond. It's silly to think a consumer can be tapped out when the U.S. stock market, which most of anybody of our listeners are involved in, increased the most on a wealth to GDP basis ever last year, almost $13 trillion. People just have so much money in there. I mean, it's more paper money, but it doesn't matter. The homes or wealth are it's silly, yet retail sales are still below. I'm still lagging versus inflation. That to me is, yes, McGlone, you've been early. You've been wrong. You've been saying this for 2 years. But to me, this is where we have to get that big test, is what happens when that massive wealth creation machine reverts. It's not an if.
So Scott, what about you? Are you thinking that, do you see a potential recession in 2025 or a slowdown at least?
I mean, it's a hard question, because everything screams recession for 2 years, and they always have another lever to pull that I'm impressed with. And frankly, I think they're just going to get the money printer going soon. So I have pretty high confidence in their ability to continue manipulating the market to allow for stocks and assets to go up for a little while longer. I don't really know. It's that I'm in disbelief that we haven't had the drawdown that you would normally have, as Mike always points to. Forget depression or, once in a lifetime event. At some point we should just get a correction. And like I said, I mean, I thought we might be getting one now, and then everything pumped on CPI, right? So I just feel like they're looking for the buy button still. Consumer seems very strong. Anecdotally, every flight is full, every mall is packed, every restaurant is packed, every hotel is packed. They're spending their faces off, whether that's on credit or not. I have no idea, but we're going to need to see something significant here for the consumer to really stop spending.
Key thing you said there, Scott, also is looking for the buy button. That's what you do in January. Yep, it's what happens by next month.
Yeah.
That is true. And in all fairness, I expected a recession by late last year, and it obviously didn't materialize. I think it's been surprising at how resilient the consumer has been. But you also have to wonder if we've just been brainwashed and programmed to say, hey, well, just keep spending because the Fed will always bail us out and the government just keeps doing their thing. And so I can understand why people think, hey, listen, don't worry about it. Just keep spending until we know at some point it runs out. And then the question is, how bad does it get? Like when the Fed can't save us, when the government can't save us, you're right. Going back to Scott and Bitcoin, that's probably when you want to own Bitcoin and gold, those two assets, when everything else collapses around you. So maybe that's a good note to leave it on today, folks. I apologize for my camera issues. So far, it's working, but it might cut out at any point. So we'll leave it there. And thank you, gentlemen. Guys, follow below. You see their social handles there. And we will be back hopefully next week with another episode of Market Mavericks. Take care, guys.